Getting pre-approved for a mortgage is one of the most important steps in the home buying process. So in today's video, I'm going to be covering what a pre-approval is, why it's so important, and how to get started. I've also made up a PDF with all the information that you will need to get pre-approved and where you can find that information. A link to the document will be in the video description. And with that out of the way, let's get into it. You might hear the terms pre-approval and pre-qualification used interchangeably. The name doesn't really matter, it's the process. A good pre-approval will verify your income, your debts, and your credit score to give you an accurate picture of what you can afford. Always ensure that your lender reviews documents like your pay stubs, job letters, and your tax returns to confirm your financial details. A pre-approval without verification isn't reliable. The process starts with a mortgage application, where you share details about your income, employment, debt, and savings. You'll also need to include supporting documentation, including a job letter and recent pay stubs, bank statements showing your down payment funds, and a gift letter if part of your down payment is from family. Once your lender has this information, they'll calculate a maximum purchase price and issue a pre-approval letter or email outlining what you can afford. Several factors influence your pre-approval, including income, down payment, credit score, and your debt-to-income ratio. Please keep in mind that bonuses and overtime might not count unless they're consistent and verifiable. Keeping your debt-to-income ratio low can increase the amount that you're pre-approved for. It's one of the most important metrics lenders use when assessing affordability. It's a good idea to start the pre-approval process early, even if you aren't looking to buy for a year or two. Why? Because if your credit score or income needs improvements, a lender can help you create a plan to get to where you need to be. Starting early also allows you to lock in rate holds, which protect you from rising interest rates for up to 120 days. If rates drop, most lenders will honor the lower rate. One of the biggest mistakes buyers make is taking on new debt after being pre-approved. This includes buying a car, new furniture, or opening a credit card. This can affect your debt-to-income ratio and even invalidate your pre-approval. Other pitfalls include not providing accurate information up front or failing to update your lender if your financial situation changes. Always keep your lender in the loop to avoid surprises later on. Once you're pre-approved, you can start house hunting. But remember, a pre-approval isn't a guarantee. It's based off the information available at the time. And final approval depends on the specific property you choose. Stick to your budget and plan for additional expenses like closing costs. Speaking of closing costs, if you're unsure what those are, I have made a video specifically on that topic. If you're interested, check it out on my YouTube channel. To recap, a solid pre-approval involves verifying your financial details and gives a clear understanding of your budget. Start early, avoid taking out new debt, and stay in touch with your lender throughout the process. Also, don't forget about the PDF I mentioned earlier. The link is in the description. That's all for today. If you have any questions, please feel free to leave them in the comment section below or reach out to me directly, and I'd be happy to go over things in more detail. I hope that you found this video helpful. If you did, do me a favor and give the video a thumbs up, and consider subscribing to my YouTube channel for more real estate related advice. I appreciate you taking the time, and I'll catch you on the next one. Thanks for watching.